The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street. Yes, you just want to give me a hug. I know you do. Anyway, we're getting ready for Turkey Day. We'll be gone tomorrow, but back again on Monday. The TFNN offices will be closed on Friday. So getting our newsletters done a little earlier this week. Working on the Tech Insider this morning. But I do digress. And a lot of stuff going on out here in the markets. Let's get this right, correct? There we go. It is one of those days that you, as a trader, a lot of times dread, and that is sitting on a market that really doesn't want to go anywhere. Of course, we've got the S&P cash up less than a point, and we've got, what do we have for volume? Just under 1 billion shares. So, you know, it's going to be a quiet day. And, what can you say? It's going to be quiet into tomorrow also. You get a little bit of market jitters. Some people wanting to exit stage left a little early before the weekend. Of course, we'll have a half day on Friday, but not a lot happens on that day. The real action, if there is going to be any, will be on Monday after we get at least the first view of what we think Christmas will be like. Going to probably be a little light in the Northeast because, of course, weather. The rest of the country looks probably going to be okay for Black Friday and the few shopping days after it. But I think we're probably already getting just a little bit, probably a little bit of the euphoria taken off by the weather. So no one's looking for huge numbers. If the weather improves a little bit better in the Northeast, maybe there will be a little bit more shopping. But anyway, we're waiting for those numbers. Probably won't really see a whole lot until Monday. There'll probably be some false rumors on Thursday, and you'll probably see 5 points up and 5 points down on the S&P cash. And at the end of the day, it'll probably be flat yet again. But it's one of those times. Now, what's truly moving and telling me, I think, in the future what's going to happen are commodities. And we're going to get into that a little bit. Of course, Andy's on Tuesdays, and he's going to talk a little bit more about it. But again, it's one of these markets, and I've been bringing this up for a while. Between now and the end of the year, the thought of having monstrous volumes and huge moves are probably going to be somewhat muted. But I'm looking for a slow and steady drip up. I thought we'd be maybe at 2070 at the end of the year. I'm probably going to have to up that to 2100 at the end of the year. I think we've got just a little bit more to go. And for the most part, it's going to be a very quiet end of the year. And, you know, we can just listen to what's going on out there. Yes, it's just going to be the drip of the market, probably higher. Some people like to say it's stumbling, kind of like from the drunkard's walk. I'm going to go this way a little way. I'm going to go this way a little way, but eventually I make it home. But just too many stocks having too concentrated of a short position. The rest just kind of hang out here. Anyway, it is a beautiful November 25th if you're a duck down here in Tampa, because the rain was hard, but not as bad as it could be. On this day in 1835, Andrew Carnegie, future steel king, is born in Country Fife, Scotland. Carnegie comes to the U.S. when he's 13, goes on to forge the steel industry that makes America's railroads, bridges, and automobiles possible. He also does a lot of other things. He establishes the public library in 1901, becomes the world's richest man, selling out to J.P. Morgan for $400 million. But by his death in 1919, he's given away $350 million of that $400. And down to his last paltry $50 million in 1919 dollars. That's when, what was gold, 30, 20 bucks an ounce or something. So it gives you a little bit of idea. Adjusted for inflation, he is and probably is going to be the richest man ever, probably besides Croesus, who was a guy that I think he had cash only when there was gold and a bunch of rocks. So I don't know if there was a whole lot he could spend his money on. It's not like, you know, you go to the local store at Tiffany's and start buying stuff. You got a bunch of cash. I'm talking about Croesus, by the way, because I think it was like, I don't know, 100, 500 BC or something. So not a lot to spend your cash on. Morgan had a little bit more to spend his cash on. But I will always thank him because, of course, he led to the best joke ever in the world. And that is, how do you get to Carnegie Station? Or how can you get Carnegie Hall? Practice, practice, practice. Also, I've never known anybody this rich that gives away this kind of cash, especially to PBS. And one time it's Carnegie, the next time it's Carnegie. Don't you think with all this cash, they'd get his name right, at least one way or the other? Every time I turn on PBS, it's a different pronunciation of his name. Carnegie was asked how he defined success. Carnegie said, the power to acquire whatever one demands of life without violating the rights of others. Actually a pretty decent dude. Of course, really pushed a way of burning the unused coal out of iron, pig iron, and actually making a very good steel for rails and building boilers and all the other stuff that came from trains. His 10 elements of power are the habit of definite of purpose and promptness of decision, soundness of character, strict discipline over one's emotions, obsessional desire to render useful service, thorough knowledge of one's occupation, tolerance on all subjects, loyalty to one's personal associates and faith in a supreme being, enduring thirst for knowledge, and an alertness of imagination. But I think he had all those things, just at the right place at the right time, and let lightning strike, and he became the king of iron and steel. There are some new reports out. Of course, the spineless weasel, spineless lying weasel at Facebook, who's been lying for a long time about H-1B visas. We finally have the exploitable guest workers and not a lack of available American staff. It seems pretty clear that the industry just wants lower-cost labor. Dean Baker, the co-director of the Center for Economic and Policy Research, wrote in an email. But basically, they've come out with a study with a business magazine, and it shows there is no shortage. There's no reason why we need to import people from India. The only reason that of course, Zuckerberg is on to this is that he wants lower wages, and of course, we've already seen a cabal of people that probably should be behind bars for lowering and collusion and a conspiracy to make sure that they paid lower wages to programmers already. Probably close to my heart, but basically, the studies are out. They've been pretty much passed around over the last couple of days. Waited a little bit before I talked about this and see if anybody said, well, it's really not true, blah, 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 blah. And basically what Zuckerberg wants is a bunch of indentured servants. And if he really wanted to use those folks, all he has to do is open an office in India. He can hire all of them that they want. But that's not what he wants. He wants to bring some people over here to bring down the cost of American programming. Anybody that's ever farmed anything out to India knows what they're going to get. And the whole idea is to bring some people in that are probably B or C level people to drive the cost down of the A level programmers. So it is problematic. Hang on just one second. And what else do we have going on here? Anyway, I'm a little upset about that just because some people doubted me. And I thought...
I find your lack of faith disturbing.
Anyway, when I said 6 months or 9 months ago that it was all bogus for the H-1B things, at least there is now some fairly definitive proof that there is no shortage. Like he said, just if you want to pay less, I always want to pay half of what anybody wants for the latest TV, but I don't get it either. What can you say? Upscale jewelers Tiffany and Company reported better than expected rise in same-store sales. A huge move in this stock today. It was way down pre-market. Then it was way up in the beginning of the day. It's been kind of all over out here, and I'm not exactly sure. Very light volume, too. That may be part of it, but it certainly looks like they're driving this around. If you looked at the earnings, you would have expected this thing to open up at about 100, and I think it was trading at one point right after the earnings at about 102 or 103, and then suddenly everything changed. But it is problematic in that there is such light volume and they can push these stocks around just about anywhere they want. If you dig through it, though, basically they're saying there's starting to be a little bit of weakness on the upside of this, but I have a feeling that a lot of people that are operators in Tiffany's didn't want to hear that, so they started buying just a few minutes before they open this thing up. I would watch for this thing after the end of the year. That weakness looks like it's going to carry on for a few more quarters when I read through what at least the company had to say. But of course, certainly with light volume, as light a volume as we've got out here, especially compared to yesterday, probably a good indication that we've got some games going on, some thimble rigging. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And Microsoft has filed a lawsuit against the IRS on Monday, seeking information relating to the agency's probe in the software giant's tax records. The suit filed with the U.S. District Court of Columbia accuses the IRS of unlawfully withholding information it requested through a Freedom of Information Act. And what's this all about? Apparently, the IRS decided to audit them, and then they subbed the job out to somebody else. And Microsoft thinks that that company is more than being free with that information to one of its competitors. It looks like, it's one of those, we lost the emails until, a couple of days after the election, and then all of a sudden the emails show up. Kind of this same thing. It certainly looks like maybe the IRS is in cahoots with somebody, or just embarrassed and doesn't want them to find out the fact that one of their auditors has been rather loose and free with the information of what's going on in Microsoft. But we'll probably find more about this in the future. But there may be some people going to jail over this in the near future if indeed this auditing company was giving data out to some of Microsoft's competitors. A real no-no, and even if you act as an agent of the IRS, the same laws would apply to you as if you worked at the IRS. So maybe some people going to jail. Unclear exactly what Mr. Softy is noticing, but I think they found out pretty quick that someone else had some information on what they were doing, which has not been made public yet. But they pretty much knew that information leaked, and they pretty much understood that it came through the IRS and through the auditors. And the IRS, of course, being the brave people and law and God-fearing people they are, instantly violated the law and did not provide the people that ask for it, i.e. Microsoft, for the data, which cannot be kept secret. Apple's market cap briefly passed $700 billion today on the open. Got to, I think, a $701 billion for a brief shining second. I'm thinking the more I look at it, Apple has a one of these interesting patterns where it could be one of the biggest moving stocks next year to the downside. And I'm going to be watching it closely, but I don't think it's going to be one of the weakest in the first month or two. I suspect by the time we get to March and we find out that there's not going to be another product with 65 or 69% margins, and that everybody has bought the new super large-sized iPhone 6 Pro, or whatever they're calling it, i6, iPhone 6 Plus, that it's going to be very interesting what they do in the future. This watch continues to look more and more problematic. They have released a version of the operating system for it, and people are still not exactly sure what they should be doing with it. Will people buy it? I think people will. Is it going to make the difference? Right now, I would say from looking at the apps and the rumors and reading the programmer boards where people are talking about programming apps for this, are there going to be Apple people that would buy it if it was a, I want to say so many things, but I probably should not. We'll say that it was a giant lemon, leaking lemon juice on their forearm. Would they buy it? Yes, there would be a certain amount of people. The question is whether or not it will become anywhere close to being ubiquitous. And my answer right now is, for what they've shown, there is not a compelling reason to own one. Now, maybe they're going to update some of the stuff on it, but if we were talking about the product they showed last fall, or this fall, I just don't see it, and I don't think a lot of people, other people do too. It looks to me like, especially this valuation over the last 2 weeks, is mostly about hedge funds, one or another, just slowly bidding the stock up into the end of the year and putting some lipstick on that pig.
Let's put some lipstick on this pig.
That's what they're doing. Putting lipstick on the pig. It's actually not a pig, but it is one of those stocks that I think probably in historic valuations jumped the shark probably at about 103. Texas Tea, Venezuela, Russia, Mexico, and Saudi Arabia will monitor oil prices for a year, but did not agree on any output cut. Of course, we're going to the big announcement on Thursday with OPEC, but most of them are already saying they're going to just let it ride. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, I probably have the most important chart of the week here. And that is the 1,001 days in the life of a Thanksgiving turkey. It's all good until the last day. They gain weight, treated well, and then there's the giant surprise on that last day. And that's the problem with randomness. We'll probably talk about more about that next week. But I always like this chart, which is it's all great until the end. And unfortunately, in the stock market, every once in a while you find a stock with a chart just like this. Think of Enron. Maybe taken 30 days for it to actually die, so it wasn't kind of as quite the end that turkeys have, but Enron kind of was a turkey, wasn't it? Anyway, it is a mad market. And we're going to start looking at some charts here fairly quickly. To me, there's a few other things that I didn't have time to get to. One is there are a huge amount of puts being bought on the XLE for next week. In fact, a week from Friday's expiration. It is tough. But at least the people with a lot of cash on the street are betting way to the downside. And that would probably imply that they think that nothing happens at the OPEC meeting on Thursday. But let's take a quick look at the XLE while I'm talking about it. But it certainly looks like people that out there in the know have already got the heads up that there's nothing going to happen. Of course, down on light volume out here today. Still have a untested low at 77.51 from the October 15th low. We've had our bounce, and it's moved up. And to me, the question is just how long is it going to take before that XLE gets tested back down here at 77.51. 69 million shares, so there's a lot of volume out there. But at that point, you'd want to be looking to see if volume came in or did not. But I would say that you've got a pretty good indication that we're looking for lower prices in the XLE, maybe sooner rather than later. Another one was looking at copper. I don't have a chart up on it. But it was down 1.5% today. I noticed that it broke the $3 mark. Maybe Andy's going to have more comments about it at his show in 5 o'clock. But to me, that's another big warning signal out here for the deflationary story in the markets along with the XLE. I don't think it's going to have any immediate impact, i.e. before the end of the year. Everybody's pretty much decided already in the equity market which way it's going. But it is it. Yeah, the previous lows around 288 are pretty much what you're looking at in copper. And the question is, does that hold? But I suspect, we just see a lot of weakness in a lot of these things, and it is that. What else do we have go on? Okay. Is there anything else on my list? Oh, Workday. Workday, WDAY. One of the movers out here, WDAY, off 6% as we talk at 86.92. I'm looking through the conference call right here. I'm trying to remember the words where this thing fell out of bed this morning. I don't know. Anyway, earnings came out. They didn't like it. It was back down. Again, this is another one that has a high volume low. That high volume low is back out at $64.21. The April 8th low, and I love this company, but I need to have that 64.21 tested. And of course, suddenly we've got, even on today, not a lot of volume out here. But could we see, especially some of these stocks like this, may still see a little bit of tax selling before the end of the year. So you may see this one under pressure. If you're going up from right now, you normally have a short squeeze. If you're headed down now, you have a lot of people that want to bail for a tax loss sale, and these stocks actually are the ones that may look the best come January 1st, where they've had a lot of pressure on them to the end of the year. But if we could get down here with light volume, that 64.21, I would love to see it. But that would be interesting. Anyway, you can give me a call at 877. Oh, I forgot to do it. Here we go. 877-927-6648. Anyway, to what else is going on? Oh, you can also email me at path@tfnn.com. And what else? Andy says I sound mad. And I don't think I think he's close. I twisted my knee and am somewhat amount of pain today. So I'm hoping that I can go put my knee up when I'm out. I kind of did too much motorcycling over the weekend and dirt bike riding, and I kind of twisted it. And it wasn't bad yesterday, but boy, is it getting tough. And of course, Andy was MIA yesterday because of a tummy flu. So he says he's feeling better today. But it's always that time of year where you probably go out and start overdoing it a little, whether it's eating or trying to go up the side of a tree on a dirt bike. It just some of those things just don't work that well. But ignorance is bliss. I keep on thinking I can do all the same things I did when I was 20. And for the most part, I'm right. Arcadia Pharmaceuticals, ACAD, $29.31, September 12th was the high, 3.5 million shares. Got a little doji out here today. Yesterday we had 1.4 million shares. Today, again, very light. And this is where you get into this point where, yes, our volume's light, but boy, it's tough to do anything up here. These, certainly if the market had a surprise, you wanted to hop on some, these will be the first one you want to look at. Unfortunately, we just have a market that wants to kind of grind up into the end of the year, maybe 30 points higher on the S&P cash. I think it's going to be kind of a 2 steps forward, 1 step back for a number of days. So it's going to be problematic for a lot of people that think that they're going to make money like they did over the summer. And it's going to be somewhat more problematic. But this one, energy was a lot to the downside, up to the upside. But Avago, of course, one of the big suppliers to Apple, and one of the reasons why I think, we had some decent energy on the way back up. Was it more than the down? Pretty much a coin flip, 3.7 to 3.8 on the way back up in Avago. But we also get OVTI, which is the camera supplier to Apple next week. And if we get the earnings out from those folks, this has been kind of very light back up to the highs here. If we get something that's kind of mediocre out here, I suspect that my belief that Apple is going to top out here in the next week or two and just kind of tread water to the end of the year, and then maybe even tread water for the first month or two of next year in heavy distribution, and then maybe come into third, fourth month of the year, something like that. Kind of looks like this is what's setting up. But certainly OVTI, I think, is out on Tuesday for earnings. So you want to keep an eye on this one if you are looking at Apple. And, of course, since Apple is 14% of the NASDAQ now, you probably want to keep a close eye on this. Of course, it needs to get to 28.34 to actually test the August 14th high, but 11 million shares, and we certainly are in that candle so far today. And one of the things I dislike also is this huge candle that we had on the 16th of October without much volume, and that kind of gives you a good idea that you popped up. Volume really didn't increase, and you've kind of gone sideways out here at overhead resistance. So you want to keep an eye on that. Buffalo Wild Wings, another one up here hanging on extremely light volume. Unfortunately, there is seasonality to Buffalo Wild Wing, or fortunately, I guess, for them. And that is pretty much through the Super Bowl, these guys have a fairly good correlation staying up in the marketplace. But when we look at even to be conservative, the July 1st high with 1.1 million shares at 167.36, or the high from July 29th at 167.64 with 1.6 million shares, that gap down after that on 4 million shares. So we were back up. We filled the gap. Nothing really approaching. What'd you get? You had a gap up on the 28th of October with 2.7 million shares, but now it's just drip, 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 drip up here a little bit higher. But certainly 329,000 shares today, going up against even 1.1 million shares for that July 1st high, or even the less conservative 1.6 million shares from the July 29th high, gives you an idea that we're probably pretty lofty valuations for Buffalo Wild Wings, especially when they're raising their menu prices. The question is whether or not people will continue to pay it. And I don't know. Citigroup, of course, the XLF, a lot of these things are up here with light volume. I mean the financials. When we are when we're down here, what can we say? On the 16th, the gap down on Citigroup came with 63 million shares. We are back up and kind of turtling and prairie dogging above that in Citigroup. 10 million shares on the September 19th high at 54.13. Last couple of days, we got 18 million shares. Really shows you just how light these volumes are coming in. Now, what I've talked about in so many of these stocks is the energy was about almost exactly the same on the big leg down from the around the September 1920 highs back down to the October 15th lows. This one, it's off about 10 or 15%. So these financials, more than any of them, seem to be looking like that they are they incredibly weak? The answer is no. But are they seem to be weaker as a bunch? The answer is yes. Again, you can give me a call at 877-927-6648. CBRE Group, CBGBs. CBG is the symbol on that one, but I think it has nothing to do with CBGBs. July 24th high at $33.77, 3.4 million shares into it with 1.1 million shares. Kind of pulling back out here today. Energy is a little bit closer out here from the leg down to the leg back up. So there's not a lot in this, but again, it looks to me like we're pretty much at these highs without a lot of continuing movement. There would be stocks like this one, Catamaran, CTRX, that I would be short and short in a big way if we weren't butting up against Christmas and December. Catamaran came down on monstrous volume. That was on the 27th of February with 18 million shares. We've been bucking up through that gap for the first time, 4.8 million shares. September 8th got up with 1.4 million shares, and we're up here with about 1 million shares a few days ago. It's pulled back down out of this gap. So pretty heavy resistance above $50 on Catamaran Corp. But again, I need to see, and this is one of the weaker ones. So I'm going to be watching this for a possible one to pull the ripcord on come the 1st of January. But I think a lot of these stocks can go sideways until then. DuPont, Mr. 3M, DuPont, got a September 24th high with 7.7 million shares for Mr. DD out here. And this is another one that looks incredibly weak, at least for the leg up off the bottom. This one's got more of a W formation, but very, very weak numbers since the last high volume low of October 29th at $66.22. You still have a untested low at October 15th low, 64.55. My guess is if you're looking for weakness in the Dow, this would certainly be one of them. We are getting close to that high on September 24th. What did we get? 20 cents short 3 days ago, but 7.7 million shares to 3.2 million shares, a couple of dojis, and now a little bit of pullback here today. So keep an eye on that. So just check it. Okay. Frontier Communications. We'll get this one in before the break. This one had a huge pop-up July 29th with basically, is that right? 120 million shares. Now it's coming back into that on 12 million shares. So 1/10 the volume. I'd be watching Frontier Communications very closely out here, and maybe some sister companies in the same business, because this one looks like it's up against massive resistance from that pop higher on July 29th. When we get back, we're going to look at a few more stocks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
That's right. Next 2 hours with Tom O'Brien. He gets to close the market and then let us know how HP did from the earnings. Boy, I tell you what, when you look at this chart, this is like a lot of these things. You're up here with very light volume pre-earnings. The last major high was $38.09 from September 9th. 13 million shares. 3.6 million shares today? Been kind of light waiting for earnings here the last few days. But one thing is not in short supply, and that was the energy back off this bottom compared to the energy down, except one huge day that actually is kind of up here with high volume, which is kind of weird. I'm going to go to that October 6th high with 55 million shares. We kind of went back through that, but I don't know, you can just kind of almost... I'm almost going to put that out as a pop or a click, maybe some noise in this market. But coming back off the bottom, we had no shortage of energy except for the last few days. And I think this is going to be very interesting to see. I think of the active CEOs in technology, right now she has to be the best. I would have given that to the people from, or the CEO from Oracle until he resigned. But she's now had 2 major companies and been able to pretty much turn Hewlett-Packard around, get the market liking it again, especially with most of the pundits yelling and screaming for her head from the day that she took over. Kind of a very big differential from, let's say, Yahoo, where the press was in love with that CEO. But if you take a look at and take out the Alibaba portion of that, she hadn't really done much. HPQ had a lot of problems when Meg Whitman came along, and she continues to do well. Of course, they're going to be splitting up to 2 divisions, and there are a lot of new products on their way. I've looked at some of the new ones that they have, the printers, and of course their new, I'm not going to call it desktop publishing, I'm going to call it desktop crafts. Kind of interesting. I can see the application for business. Right now they've kind of just shown it as kind of an arts and crafts and notebooking kind of thing. But they've got some interesting ideas out there. I think that the printer business will be very good for them. It's going to take them a year to get into it, but of course it's going to take them a year to separate and extract themselves. But she did incredibly well, and she bought, of course, at eBay, she bought PayPal and turned it into what it was. And the biggest part of what eBay is right now is a payment system. But she continues to do extremely well. I'm going to be very interested to see how earnings come out tonight. But I think they're going to be okay. I don't know if they're going to be anywhere with what the street is looking for. But every time they've counted Meg Whitman out, she's come back and showed them that she is probably right now the best manager of a big company. When you think of Hewlett-Packard having 450,000 employees, I think that's what it has. It's basically like controlling an army. And to get back in, at least turn it around, especially with the major mistakes from people before it, the disastrous purchase of that English company. I think she's done a pretty good job. I like her. Anyway, HPQ after the bell tonight. Tom O'Brien will be calling that. After that, Andy Heck will probably be talking about pods of copper clappers and why copper is in the dumpster. Anyway, so when you can, not when you have to. We'll see you Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.